Hello everyone, today's video is a continuation of the series on the recent budget. So today we'll be focusing on corporation tax. So this made all the headlines. Why? Because it's the first rise in corporation tax rates for decades. So where we are currently, we are at 19% corporation tax flat rate across the board, no matter what size of business, from small startups to huge multinationals, 19%. Now, that was following that 19% as it used to be a lot higher. It came down. It was one of George Osborne's policies when he was the Chancellor, to get the UK tax rate to be one of the lowest in the G20, and he had a roadmap to get it down. It got to 19. It was then going to go down to 17. That was the plan. But then last year, at the start of the pandemic, they said, no, we're going to keep it at 19. Now, of course, fast forward a year, and the country's in so much trouble with the debt that, because of the triple lock on the fact they're not going to increase headline rate on income tax, VAT, and national insurance, where else is there to go that's going to raise a decent chunk of change? Corporation tax. So the corporation tax, the reversal of its downward trajectory, going to go the other way, and it will increase to a top rate of 25%. Now, this 25%, that compares actually quite favourable to G7 countries. I think it's one of the best in the G7, but it's a long way from being the best in the G20, which was obviously the original political aspiration. So just in comparison, the EU, the average rate of corporation tax in the EU, which of course we've just left, is about 21%. But even at 25%, it will still be lower than the USA and Germany. However, it's still a big increase, 6%. So when does it come in? It comes in from 2 years' time. So thankfully, the Chancellor gave everyone 2 years' notice. So all corporates, 2 years before this comes in, from the 1st of April 2023. Now, it's not going to be a flat rate like we have now. It's a bit of a throwback to what we used to have a decade or so ago, where we had split rates. So let me talk you through that. So the first £50,000 of profits in your company, that will be taxed at 19%. Any profits that you make in excess of £250,000, 250 grand, that will be taxed at this new top rate, 25% corporation tax. And then for the slice of profits that you make in between 50 and 250, that will be taxed at a blended rate between 19 and 25. So-called marginal relief. And it takes us back to the tax system that used to operate 10, 15 years ago, where again we have this thing called marginal relief, because we had two different rates for two different profit levels. So it's like, when you've been in the game long enough like I have, you see everything come full circle. So when we thought we were getting to a nice simplistic corporate tax regime, flat rate, one rate for everybody, now it's back to different rates depending on the profit levels and marginal relief. But anyway, that's where we are. So, and when you look at the numbers, I always like to have a look at the Red Book, the Treasury budget Red Book that has all the details and the costings, and it says what they expect to raise from this. So by the time we get to the year 25-26, the Treasury reckon that change in corporation tax will bring in about £17 billion a year. So that is a big amount for a policy change. It's the biggest single item in the budget from a couple of days ago. The one thing that brought in the most amount of money, basically. So that's why they've done it. So if you are a company, you've got 2 years before this kicks in, and like I said, it's basically 19% for the first 50 grand, somewhere between 19 and 25 for the next 200,000 of profits, and then if you're making profits in excess of 250, that will be at 25%. Statistically, it will mean that most companies in the UK, when you compare, when you add in all of the small businesses with the large ones, most companies will actually not pay that 25%, because most companies don't make more than £250,000 profits. But those that are fortunate enough to do will be hit. So that's the change in the corporation tax. Now, there is also, as a sweetener, until we get there, to encourage businesses to spend surplus cash that is on their balance sheet, the announcement of a new, what they call a super deduction for capital allowance purposes. So normally, let's say you buy a bit of plant and machinery for your business. Let's say you're a widget manufacturer and you buy a new forklift truck, and that costs $50,000. The tax regime at the moment says, okay, that $50,000 that you buy in the forklift truck, even though it's a capital item, goes on your balance sheet, will still give you immediate tax relief on that. So it'll knock 50 grand off your taxable profits. Very nice. Now, what he announced in the budget this week is the new, what they call a super deduction, which means that the government, for tax purposes, will assume that when you're working out your corporation tax bill, assume that that 50 grand was actually 130% of 50 grand. So that's about 67,000. So from on your tax return, you'll be able to knock off 67 grand against your profits instead of 50. Hence the super deduction, as it's known as. So in other words, you're getting tax relief in excess for what you've actually paid, which is great. And the Chancellor was saying it's something that we've never tried before in this country. True, for capital items, it's never happened, but it's basically how R&D tax relief works. And I've done separate videos on R&D tax relief. But it's a welcome thing. So it's to encourage investment in the economy, because economists believe there are billions and billions of just cash doing nothing, getting interest at low rates, sat on company balance sheets, doing nothing when it could be used to generate better productivity, better yields, which all helps UK PLC. So to encourage businesses to invest, to basically swap their asset class from cash to assets, to plant and machinery, that will that sweetener, the super deduction, will hopefully encourage them to do that. Now, that is only going to be in for the next 2 years. So that starts on the 1st of April 2021. So businesses will have this new super deduction available on equipment for 2 years, and then it will revert back to the old system, which was still quite generous. It was 100% capital allowances. Now, the level on that will wait to be seen in terms of how much you can get, but that is the plan so far. And then, of course, after that 2 years is up, that's when the new corporation tax hike kicks in. So a couple of things on corporation tax there. And then the third thing to mention on CT is loss relief. So when a company makes a loss, which it's anticipated a lot of companies will for this financial year because of the pandemic, normally the loss relief rules say that you can do several things with that loss. So let's say you've got a 31st of March 2021 year end and you make a loss. Now, you can elect to carry that loss back for tax purposes to the year ended 31st of March 2020, when let's say you made a profit, and you get a refund of the corporation tax that you paid for that year. You can do that. That's option number one. Or you might say, well, instead of doing that, we'll carry the loss forward. So you may say as a business owner, well, the year ended, we're coming out of the pandemic, the year ended March 2022. Looks like it's going to be better. We're going to be making some profits. We'll be paying corporation tax for that year. We'll just carry the loss forward, and it will reduce the tax that we have to pay next year. So you paid tax in the previous year, no tax this year because of the loss, and the loss will mean no tax next year. Or, like I said, the alternative is carry the loss back. So refund of tax, no tax this year, but then pay tax next year. Better or worse off from a pure quantum of the number. It's just a timing thing. It's just, would you rather have? Would you rather have the refund now or have it to set off in the future? Now, what he announced, did Sunak, in the budget, was an extension to those loss rules that say you can carry back that loss further. So in my example, I said you could carry the loss back to the year ended March 2020, get a refund of corporation tax. What you can now do is carry it back for 3 years. So, and the reason he's done that is because let's say you had such a big loss in this year now because of the pandemic that even when you carried it back to the previous year, there's still excess loss, as it were. You know, your loss now more than wiped out your profits of last year. So then you'd have to do a combination of carry back 1 year and then carry forward to next year. What he said is actually to make it easier for businesses to get their hands on cash now, more tax refunds now, you can carry the loss back to 3 years. So let's say in the example, you carry the loss back to 2020, got a refund, but there's still excess loss, then now you can carry that back to 2019 and potentially 2018 until all of that loss from this year is utilized. So a welcome extension to the loss relief rules. He announced it was going to be a temporary measure, probably last about 2 years, and then they revert back to the existing rules of just a 1 year previous carryback. So that's the package announced in the budget for corporation tax. If you like this video, please subscribe there, and I will see you soon.